Good afternoon, ladies and gentlemen. Thank you for joining us. My name is Brad Jasper, and I'm here to introduce Mr. Mark McVeary, President of Reverse Mortgage Answers. He has over 25 years of experience in reverse mortgages and is considered an expert in this field.
Thank you, Brad. Welcome, everyone. We all know that one of the biggest concerns for most retirees is outliving their nest egg. With people living longer, we're seeing more and more retirees incorporating the reverse mortgage into their retirement plans in order to relieve their fears of running out of money. Hi, I'm Mark McVeary, and I'm the owner of Reverse Mortgage Answers. I'm sure you've seen the commercials and heard about reverse mortgages. My goal is to be your dedicated resource for accurate answers about how this loan works and how it can benefit your clients. And I know you guys have heard a lot about them and maybe some of the negatives, so let's talk about the elephant in the room. Over the years, the reverse mortgage has received some negative press. Like all financial products, they weren't perfect when they first became available. However, the federal government has made significant changes in recent years to safeguard the reverse mortgage. Many people are under the misconception that they're giving up ownership when they do a reverse mortgage. This is simply incorrect. The homeowner retains all rights of ownership. This means they can leave the property to their heirs and sell and move at any time without any prepayment penalty. The reverse mortgage is simply a loan that is paid back with interest when the last remaining reverse mortgage applicant leaves the home. So again, let's talk a little bit about some of the facts. The homeowner still owns the property. They can leave the house to their heirs. They can sell the house and move at any time without any prepayment penalties. Another complaint I hear about the reverse mortgage is that they're expensive. The only closing cost that's different than a regular conventional loan is the mortgage insurance that goes directly to the federal government. This insurance is just like any other insurance. You hate to pay it, but you're happy to have it when you need it. The mortgage insurance guarantees that if the homeowner ever owed more than what the property is worth, the borrower or his or her estate would not be responsible for the deficit. Let me repeat this. The mortgage insurance guarantees that if the homeowner ever owed more than what the property is worth, the borrower or his or her estate would not be responsible for the deficit. There's no other loan like this out there. Again, a little bit more about me. I have over 25 years of experience. I have done thousands of reverse mortgages. During that time, I worked with a variety of professionals, including financial advisors like yourself, to help their clients access additional tax-free money with the reverse mortgage. So let's talk about some of the basics. I tell people this all the time. The reverse mortgage is just another way to borrow money, but the big difference is there are no monthly payments. The money is tax-free and the borrower still owns the home. Basically, the home they worked hard for all these years is paying them back, so they can have some additional tax-free money available in retirement. Like any loan, there's going to be some requirements. One homeowner must be 62 years or older. The home being used must be their primary residence. It can't be a secondary residence. If there is an existing mortgage, there has to be enough money in the loan to pay off the current mortgage in full. People can bring extra money to the table to help do that if there isn't enough money there. The homeowner also needs to do third-party housing counseling, certifying that they understand how the loan works. With more and more people retiring with just Social Security, this loan is only going to go up in popularity. Let's go over how they can take their money. They can take a portion in a lump sum. They can also set up a line of credit. One of the unique features of the reverse mortgage line of credit is as the money sits in the account and waits for them to take, it grows to give them access to more money in the future. They can also receive a check each month for life or for a certain period of time. So again, they can take it as a portion in a lump sum. They can have it set up in a line of credit. They can have a check come to each month, which could be for life or a specific period of time, or they can mix and match any of those combinations, and they can change them at any time. The amount of money available is based on the age of the youngest homeowner, home value, and current interest rates. Basically, the older someone is, the more they'll receive. In addition, the interest rates available are either fixed or adjustable. The reason borrowers turn to reverse mortgages have changed over the years. Early on, this was viewed as a loan of last resort for those who needed money. And I saw a lot of clients like that in the 90s. Now the reverse mortgage is used as another tool providing financial flexibility and options in retirement planning. So let's talk about some of the strategies. One of the first strategies is they could delay Social Security and pension payouts. Typically, the longer you wait to take Social Security or pension payouts, the bigger the check will be in the future. The reverse mortgage could be the source of income that allows them to delay these payments. Second, they could postpone drawing down retirement assets, giving assets time to grow. This idea is similar to delaying drawing Social Security and pension payouts, but here, the longer they delay pulling from their portfolio, the more time the portfolio has to grow. Another strategy, increase cash flow by eliminating monthly mortgage payments. When a reverse mortgage pays off an existing mortgage, they no longer have a monthly mortgage payment, so the homeowner has extra money in their pocket each month. Now retirees no longer have to tap into their portfolio to make their monthly mortgage payment. This is a strategy we use a lot. We do see a lot of clients that have existing mortgages, and we use a reverse mortgage to eliminate that monthly payment so they don't have to pull from their portfolio. Another strategy, they get access to a growing line of credit. The reverse mortgage line of credit is different than any other line of credit because it grows with time. Since the money grows, homeowners will have access to additional funds in the future. For a lot of clients, this line of credit acts like their cash reserve. Another strategy, protect portfolio performance in a down market. We all know that the market has been on an incredible run, but what goes up must come down. When the stock market is down, portfolios and cash flow aren't going to be at their peak. The reverse mortgage can provide an alternative source of income so your clients don't have to touch the portfolios, which will give the portfolio time to recover. Again, one more strategy, an annuity-style payment using your home equity. The reverse mortgage offers flexibility in how the mortgage is dispersed. So the money is dispersed, The disbursements are tax-free, and the clients can dictate the amount they want and change their plan at any time. Why is this important to you? The reverse mortgage can help your clients meet some of the life challenges without liquidating their portfolio. So when they come in with a problem, they don't always have to pull from their portfolio. And when they pull from their portfolio, sometimes it can create income tax issues. If you give that client the flexibility, it just gives you more options for both you and them. One of the things I see is that a lot of people are so consumed with leaving their house to their kids and using their assets to pay off the house, when in reality they should probably be more concerned about the structure of their portfolio. Because in the end, you can control your house value, but you do have the flexibility in structuring your portfolio. The best way for you and your staff to learn more about the reverse mortgage is to set up a time where we can come and meet and go over the reverse mortgage in detail. We can come to your office, we can do a group seminar, or just do a one-on-one, whatever works for you. And here's how you can contact me. If you'd like to learn more, I would love to hear from you. Thanks for your time today.